Okay, good morning, everybody, and welcome to this morning's Talk Forex, where you will watch us as we analyze and trade the markets live. The purpose of these sessions right here is to basically take you through the various different FX pairs and talk about what it is that we're looking to do with them today and for the rest of the week. Before we get into the webinar, I just need to go through the disclaimer, which is to say the content of this webinar is not investment advice and should be used purely for educational purposes only. All participants are advised to seek their own counsel prior to investing or entering into any trade. Spread betting and any other type of financial trading carries a high level of risk to your capital with the possibility of losing considerably more than your initial investment. The content of this video may not be suitable for all investors, and an individual should ensure that they're fully aware of the risks involved. And if necessary, you should seek the advice of an independent financial advisor. Now, just a quick tip to be able to get the most out of today's session, please make sure that everything has been turned off in the background. So, you know, if you've got emails running, Facebook, Skype, iTunes, any additional programs, please make sure that they're switched off so you can really kind of focus on what we're doing for this session here. It's only going to be 45 minutes, but I think you're going to find it very, very valuable. So silence your phone, close the doors, and give yourselves just these few minutes here. Okay, so what we will do without further ado is let's jump over to the charts and start working our way through the various different pairs to talk about what it is that we're looking at from them for the week ahead. Now, the way that we're going to do this is I'm going to start by looking at the longer term time frames and then drill down into the shorter term ones to see where it is that we're looking for the entries. The reason that we start with the longer term time frames is essentially so we can basically get the direction of the market, the overall context and direction of the market. And this is very important as traders, because what I find a lot of new traders do is they have a strategy that seems to work for them, which is fantastic. But what they do is they sort of trade it blindly. They don't look at the overall market context, the dynamics of the market. You know, is it in an uptrend? Is it down in a downtrend? Is it coming up to a major level? And they trade the strategy blindly, and then they find that the strategy starts not to work, and they kind of think that it's random, but it's not. It's just to do with the condition that you're taking the trade in. So if you can understand the market dynamic, you're going to be much, much, much more successful in the long run. Okay, so Aussie CAD, let's start there. On a daily chart, if we zoom all the way out here, so all of the lines are tiny, you can see that it's actually quite untidy. So we're in a bit of a sideways price movement at the moment. If we zoom in a little bit more, we can say, yes, the market is moving sideways, but the big swings are to the upside, not by a great deal, okay? But the lows that have been printed by the major swings are higher than the previous lows. So we've got this low over here, we have this low over here. Moving on, we have this low over here, okay? And then the highs are getting progressively higher. So we have this high here, which is higher than that previous high. Now the market is moving up, and we'd expect it at some point to break out over that high. So we can say that even though the market is certainly sort of moving, well, it's untidy, it is pretty much moving to the upside. All right, so now we go and look for our entries, and the entry that we're looking at is we're looking for pullbacks in the trend. Okay, and if we were looking for a pullback, the most obvious area to take a trade from, for us anyway, would be when the market pulls back to the 1.0103 level. Okay, so basically, well, at this high over here, it's okay. It's not too bad. All right, so you could take a trade from this level here, but we kind of feel that after the market moving in such a significant sort of direction up here, we're expecting a little bit more of a pullback than where it currently is. And the reason that we like this level at the 1.099 level is over here you have the previous swing high. All right, so it is quite a major one. So we've got this that was acting as resistance could then start acting as support if the market gets down here. So if the market gets down to that level, that's where we're going to be initiating our buy position. Okay. So Aussie CAD looking for a long from the 1.0097 in and around that area there. What about the Aussie franc? Again, let's go out to the daily. So if we go out to the daily chart, we can see again, this is pretty untidy, but again, it is moving to the upside. So we would have to say if someone held a gun to our head and forced us to trade in a direction, we would be trading to the long side. We would be buying this market. You would have to. Going into the 4-hour chart, we can see that actually the market is in a little bit of a downtrend, but that's not too much of a problem because the major trend is to the upside. So the 4-hour is making lower lows and lower highs. So we need to find a place where we would like to buy this market again. One of the ideal areas would have been this level at 0.7568. Unfortunately, it's broken through that level right now. So the next logical level is the next key level down at 0.7475, which is this previous support here, this previous support here. You can see when the market broke through this level eventually back in December of last year, it broke through there, it then pulled back to that level before selling off. And then when it broke to the upside, you have this sort of mini head and shoulders thing going on here, and it is very, very mini. So it's not a complete one, but you've got this mini head and shoulders. We've got the shoulders here, the head here, and which level is it that's being treated as the level of resistance? The 0.7479, right? So now that the market has broken through there, this seems like an obvious area because the market has proved that it is an area that it pays attention to, okay? So we would be getting in there, our stops, we could put it behind the next level, somewhere around here, at around the 0.7387, and our target would be 0.7576, easy peasy, okay? So if the market gets down here, we are betting that it's going to move up to this level before it moves down to that level. We're not expecting the market to do anything fantastic, right? We're not expecting it to go all the way up to these highs here. We just want it to get up to this area here, the 0.7571 area. And if you have any questions while we're going through this, if you've got any charts in particular that you want us to cover, please feel free to post it in the chat box. And I'll be happy to go through it because we often don't get enough time to go through all of the pairs here. So Johnny's just said, just totally ignore what price is telling me. In what sense? If you'd like to elaborate on that, then I'll be happy to answer your question. But if you're talking about the chart here, this is not, I'm absolutely not ignoring what price is telling us. We're looking at where the price has reacted in the past to try and gauge where the price may go in the future. On the 4-hour chart, yes, it looks like it's moving down, but if you look at the daily chart, if you get more context around your trades, then you can see that actually it is in a bit of an uptrend. Aussie franc weekly is closed below. Okay, first of all, using the 20 moving average isn't, so Johnny said for anybody that can't see that, the Aussie franc weekly has closed below the 20 simple moving average. Well, to be honest, that looking at the weekly charts in order for overall direction doesn't really help me anyway. I find that looking at the weekly charts, it's you're kind of too far removed from the I think Johnny's trying to start an argument here. We all know what happens to top and bottom pickers. Well, I make money, so I'm pretty okay, to be honest with you. Yeah, looking at the weekly charts is you're a little bit far removed from the sentiment of the market, and the FX markets tend to move based on the sentiment. Yes, in the long term, they're going to look at the longer term fundamentals, which are interest rate differentials and things like this. But what you have to understand is it's also about expectation, right? So if let's say, for example, let's go away from, let's say you're trading the pound dollar, for example, right? Or the euro dollar even. and you know that the Federal Reserve is going to raise interest rates for the for the next year, but that's been priced into the market. That's no longer tradable because the rest of the markets are already looking into it. They've already priced that in. Okay, so it's more the expectation, it's the sentiment of the market. And in case you weren't paying attention, Johnny, I wasn't looking for a massive move all the way up here. I'm looking for a little reaction to a key level. Okay, so just in case you missed the beginning there where I talked about what the targets are and all of that. But anyway, we're all entitled to our own opinions. And, I may lose money on this. You may make money on it. We may both make money on it. I don't know what your time horizon is, but I'll move on to the next one anyway. Okay. Okay, so the Aussie Yen. Let's have a look at this. Now, this one is a daily one, because a dangerous one, in that we can see that the momentum is to the upside. Okay, ordinarily I would like to buy support. However, the danger with this particular pair right here is where it's trading at. So if I were to buy support here, I need to understand where I'm willing to get out if the market goes against me. So if it comes down to 83.75, I need to know where I'm going to get out. And the problem with trading at these extreme levels is that if the market does break out, it can do it really quite aggressively. Okay, so you would expect to break out from here to give us a momentum move to the downside. So therefore, from this perspective, even though I'd like to be long over here, I just don't see that the risk is valid. It's not something that I'm willing to take. Hold on. Congratulations, Johnny. I'm really, really pleased for you. So this one I'm going to ignore for the moment because I want to see a setup that's kind of a little bit more obvious. This one's got too much risk here. So, okay, Aussie New Zealand. The dailies we can see clearly have broken out of structure over here. So so long as it holds above the 1.0749 level, we would completely be expecting it to make another move up. This one's been a bit of a frustrating one because over the past couple of months, we've had this big up move over here, and we haven't had an opportunity to get involved in it. Okay, so now we're getting the pullback. This looks like a good opportunity to get involved. Where would we like to get involved? At this previous level of resistance over here. So we've got this at 1.0750 in and around that area over there. If the market pulls back to it, that's where we're going to be buying the markets. Okay, stop losses will be placed beneath the next level, so somewhere beneath 1.0600, somewhere below there. And then again, we're not looking for the market to go on and swing all the way to the upside. This is why this particular strategy has such a high strike rate. So we're right a hell of a lot more than we're wrong. Is that we're not expecting the market to do anything significant. We don't want it to go and break up to other highs. We just want it to move from this area over here, the 1.0748, up to this area over here, 1.0875. So we're just looking for a small reaction to a larger level. Okay. So if we can get a little reaction to this level here where the market just stalls a little bit, pops up a little bit to there, we'll be able to take profits and make money. So we don't even need to jump down to the 4-hour chart for that one. I think this is fairly obvious. Okay, Aussie dollar. One of the things that we need to do here is zoom out a little bit, because if we look at it from this sort of level of granularity over here, it's pretty difficult to pick what the direction is. You would say that these are sort of hitting a top over here, but let's get some more context. So now when we zoom out, we can see that the market had previously, over the past few years, been in a big downtrend. And then over the last year or so, 9 months, it has been moving sideways, and it's playing with these highs over here. So this is a difficult one, right? Because the long-term trend is definitely down. However, if we look at the daily charts, we can see that it's sort of moving sideways, and also making Hold on 1 second. FX Johnny, give the stop and target in pips. And what is the FX Johnny? I'm not. Maybe you've woken up in a really, really bad mood today. I think you might not be paying attention because I told you the levels that we're looking to take profits and to get out of the trade. And I guess you probably aren't paying attention, or you're not very good at maths, because if you were, you'd be able to deduce what the pips are just from that. But I don't know. Thank you for joining anyway, and I think you're making it more entertaining for us all. So thank you very much. Okay, so from the from the Aussie dollar perspective, we would say that the longer term trend is to the downside. However, the shorter term trend is certainly making noises that it wants to break to the upside. So from that perspective, you'd have to say that it's going to be difficult to really pick the direction until it reasserts itself. You know, obviously we would like to be buying the market, but you don't want to buy it right up at these highs here. You want to see that the market's broken through those highs. By the same token, if we were to sell the market here, it's very, very possible it's going to break out of these highs and then with quite some momentum. So we'll leave that for the moment. CAD franc. Okay, so this one over here, since the whole situation with the Swiss National Bank a few years ago, this pair has been moving sideways. Hold on a minute, we've got more chats coming in. We can take a look at oil in the minute column, no problem at all. Okay, Brunian's going back to the Aussie franc, nicely sitting on the 200 exponential moving average. Let's take a look. So you're saying a bit of a correction. So which time frame, Brennian? If you let me know, then we can go back to that. I can throw a 200 moving average on and just see what it is that you're referring to. Okay, so where were we? I think we were on the CAD franc. Yeah, so since the whole debacle with the Swiss National Bank took place a few years ago, this pair has been moving sideways, okay, but we do see a break to the upside. So we're currently looking for opportunities to buy this. Where are we looking to buy? Well, we liked this area over here, the 0.7419. That's since broken through there. So the next area we'll be looking to buy is somewhere down here at the 0.7312. If we get an opportunity to buy here, we will have our stop below these levels over here, around below the 0.7202. And then obviously we'll be looking for the market. Again, not looking for huge reactions. We don't need the market to go all the way up here, which want a little reaction. So up here to the 0.7417, in and around that area there. And we'd be looking to buy it. Okay, so we've got, Brilliant says, let's go back to the Aussie franc. It's nicely sitting on the 200 exponential moving average. Could be a little bit of a correction. Let's put this onto the chart here. Was it the exponential? Yes, exponential moving average. So we can all see this. Yep. I see what you're saying here. Could indeed be some sort of a correction. One of the things I would say, Brennan, is that I tend not to just trade based purely on the moving average. Okay, I prefer trading off the key levels, which is why we'd wait for it to come down to this area over here before buying. But I can see what you're saying. It's kind of hovering along there. Could just be a correction. As I said, this, even though it's a little bit messy at the moment, you can see that it is making higher highs along the way. So I do see what you are saying. All right. CAD yen, Canadian yen. The yen's just been a bit of a nightmare to trade this year because we had the massive up move, obviously, coming towards the end of last year, just that parabolic move, which unless you were in at the beginning of it, would have been very, very difficult to get in on. Since then, the market's been pulling back, and you've been thinking that it's just a correction before a move to the upside, but the yen somehow has been really quite resilient and has just continued to strengthen all of this year. So we're just waiting to see if there is another move to the upside. So from that perspective, where do we get in on a trade? I would say that it's quite difficult right now. If you're forced to take a trade here, you would want to wait for the market to come up to this resistance area and take a sell from that resistance area. At the moment, you can't really sell it right now because the move's already taken place. We can see that, right? And at the same time, it's difficult to buy right now because it looks like we could be in for quite a bit of a down move, similar to this sort of up move here. And if you're getting in on the wrong direction there, it's going to cost you some money. So from that perspective, there are better trades out there. So let's look to see what other opportunities there are. Franc yen. So if you're determined to trade the yen pairs, this might be a better way to go. Okay, we'll just put this in here so we've got a bit of context as to where we can be taking profits and getting stopped out of our position if it goes against us. All right, so if the market pulls down to, let's say, the 111 spot 13, let's jump into a 4-hour chart there. 4-hour chart, obviously, like I said, all of the yen pairs are moving down from a shorter term perspective, but the longer term perspective, they're pointing up, which makes them a little bit difficult to trade right now. I would still, with this pair right here, I would still favor buying the market if it pulls down to this sort of area here. Again, looking for a short-term reaction. So looking for the market to come up to, let's say, the 11234 level before it breaks below the 110 spot 10 level. The problem that we have here, as I said, from my personal perspective, is that the short-term momentum is to the downside. So it doesn't look like this momentum is fading necessarily. So it is very conceivable that it just smashes through this level and then continues going down to that level over there. So I think there are better opportunities here for me. Colin says, pound yen. What do we want to do this? And in line with your key level. Yeah, absolutely. Okay, so pound yen broke below the 138 spot 5 outside descending triangle. Could be in for a big drop. Yeah, we could indeed. Actually, in our Facebook group, someone asked this question the other day. Which way do we see this breaking out of? I'm not sure. See, I think that the selling of the pound has been a little bit overdone. So I'm not sure how much downside room there is. Having said that, we know with this pair right here that when it does break, it breaks in a very, very big way. So if you're forced to take the breakout, that's probably the one that's going to pay you. However, I kind of see a more realistic situation for myself is that the market breaks down to this area over here, the 136 spot 40 level, breaks down to this area here, and then we get an opportunity to buy up towards the 13874. That's just kind of what I feel is most likely to happen. Having said that, I do agree that if it breaks below this level here, we're going to get a very, very big drop. You know, we could see the market come down all the way down to 132. So you have like a 400 pip move that will take place literally in a matter of days if it breaks below that level there. But we just have to wait and see. Princess, just bash through your fib. It's within the area of demand in line with your key level. Indeed, CAD Yen since last week. I feel that these are buys. So the Aussie Yen, Aussie CAD, Dollar CAD, and crude, you think they're all buys? Okay, well, we can cover all of them. I don't remember all of them off of the top of my head, but we can have a look at them. And then Malcolm says, sell pound Aussie and gold. You feel the same on the daily charts. We can take a look at that as well. All right, let's go through a few more of the currencies, and then we'll get on to things like oil and everything that you guys are mentioning there. So where did we leave off before we jump to the pound yen? I think it was a franc. So let's look at the euro Aussie. So the euro Aussie has got quite some momentum to the upside here. If we look at any euro chart on the daily, it's going to show us that it's moving down, as you can see there. So that's actually no surprise. But as I was saying at the beginning, the thing with the Forex markets is that they're quite sentiment driven. Okay, so you kind of need to be in line with both the longer term trend and also the shorter term trend. So what would we be looking at in terms of a trade here? Well, I kind of like selling around this area over here, the 1.4308 level. And if not there, then perhaps, depending on what sort of momentum here, if the market gets to this level and just absolutely smashes through it, you don't want to be holding at that area there. You'd much rather wait until the market comes up to the 1.45 area and then look for a sell opportunity there. If you then were to go to look at the 4-hour chart, the problem that you've got is obviously it does look like we're starting to get a bit of an uptrend here. But I don't think, but with all trends, and the fantastic thing about the way that we trade is it doesn't really matter even if the trend is against us, because we're not looking for massive trending moves. We're not looking, if we were to take a sell, which I think is what I'm more inclined to do than take a buy right now, I'd look for a sell somewhere up around this area over here at the 1.4500. If I were to take a sell there, I'm not looking for the market to come all the way down to these lows. So I'm not looking for a 1,000 pip move, which is probably unlikely to happen, at least in the short term. What I would be looking for is the market to sell off from the 1.4501 and come down to the 1.4295 or the 1.42 or 4300 area. So we're looking for a small reaction. And if you look all over the charts, one of the wonderful things about trading like that, looking for the little reactions, is that you get very frequent opportunities, and they're very, very high probability opportunities, because what you're doing is you're making money, okay, from the normal dynamics of the market. You're not asking it to do anything spectacular. You're not asking for a new break of a high or a new break of a low. You're simply just waiting for the market to just swing up and swing down, swing up and swing down, which it does all over the place, and you make money based on that movement over there. And that's what I love about this. So from the Euro Aussie perspective, I do want to be a seller. I think that we've got more room to the downside here, not necessarily there, but I want to be a seller from up here at the 1.4510. So I'm going to put an order in over here to sell this market when it gets up to this level. Okay. Euro CAD broken out to the upside here. There's an opportunity when the market pulled back here to buy it. At the moment, we're trading into fresh air. So what we now have to do is find other levels from where we can trade from. Okay, so you're looking for other key levels. We have one here. For example, it's broken out to the upside, so you have to sort of start looking for a buy in this here, but we need context around what we're trading. Okay. So what I would be looking for on this chart, we can see the market's breaking out over there. I would like to see the market pull back to the 1.4260 area from where it is right now. So pull back to this area here, where I will look to initiate a buy position, looking for the market to just come up to the 1.4379. I don't need it to go any further than that. Okay. Small reactions, high probability trades, high strike rate. That's what we're looking for. Okay, that's what's going to put money in your accounts. You don't need these big 1,000-pip moves, although they're nice to have. We just want the small reactions. We want the market to come back to here. So it's up in this sort of quadrant over there. We want it to pull back to the one spot, 4260 area, at which point we will initiate a buy up to this area at the one spot 4380 level. Euro pound. Euro pound. So this one is just very, very untidy. This doesn't have any real trend here. We can see that we've got a high here, we've got a low here. This high is lower than that high, but this low is higher than that low. So at the moment, it's sort of just consolidating. It doesn't really know what it wants to do. So from that perspective, I would skip it and move on to a higher probability trade. Euro yen, bit of a dangerous one to trade at the moment. Euro New Zealand. So this one, we can see that the market broke structure, is holding beneath this structure over here. So it's a big, big, big time level, which means that if the market were to get up to that area there, you'd probably be looking for a sell. But if we look at the shorter term movements and the 4-hour charts, you would have to say that actually the market has some momentum to the upside. So how would you trade this? How would you make money on this particular one here? Well, I think you've probably got too much risk to be buying here, just in case the downtrend continues. Okay, so if the downtrend, if I had to buy the market, I'd be looking for it to come down to the one spot 5100 area. However, I kind of think that if the market gets down to there, it could be a resumption of the downtrend on the daily. So that might be a bit of a risk buying there. On the other hand, do I really want to be selling right now? Not really, because we can see we've got all of this momentum. So I think the highest probability trade here is to wait for the market to come up to the one spot 5750 area. If we can get the market come up to this area over here, and then we become sellers, I think that's the highest probability setup. Then which way do we trade, right? Once we get up here, I'd be selling down to this area at the one spot 5468. So I wouldn't be looking for a massive move right there. That to me would be the higher probability setup. But at the moment, there is nothing for me here. So euro dollars broken to the upside. Do we see this as being a massive game changer for the euro? From a technical perspective, it's broken structure. So technically, we now have an uptrend on our hand because we have a low here, we have a high here, we have a low which is higher than this previous high, previous low, and then it's now made another high. So we have a series of higher highs and higher lows. So if we can break out above this area here, then you would say that technically the market is now moving up. So which way do we want to be taking this trade? We want to be buying the market, but where do we want to buy from? I would say, I'm not one to ever chase the market, so I would say I'd be waiting for the market to move back to the one spot 0679 area, at which point I'd be looking for a buy opportunity there. The pound Aussie. Which way do we want to trade? Okay, so looking at this over here, you'd say that the overall trend is to the downside. Let's check out the daily charts. Overwhelmingly to the downside. So the most high probability opportunity on this chart right here is selling the market when it gets to this area here, and maybe splitting up into a few positions. So taking an initial sell there, looking for the market to come down to this area here, and then if it gets all the way up to this area, putting another sell opportunity on over there. All right, so selling the market here at one spot 6545, and then selling the markets again at one spot 6783. So you're giving yourself 2 bites of the cherry there. Do you want the trade to continue all the way down to the lows? No, you don't care. You just trade to the next level. So if you get involved in the trade here at one spot 6545 and it goes against you, you add to it over here at one spot 6780. Okay, what you'll be looking for in terms of a profit target is for it to move to the next level. So if you got in over here, you'd want it to move down to this area here at the 1.6549. So then you ask yourself, well, wait a minute. One of the trades have made me money, but the other one hasn't. So what do I do? Well, you would still come out of the trade. Okay, because this one over here would be break even. This one would have made you money. Happy days, you make money, your account goes up, you move on to the next high probability setup. Okay, unless obviously there's a lot of momentum and you've got a lot of conviction there, in which case you then could look for the market to break beneath this level and move on to this next level there. But what I wouldn't want to do is I wouldn't want to wait for or assume that the market's going to go all the way down to these lows here. As I said, I kind of feel that the selling the pound story in the long term is a little bit overcooked at the moment. So pound CAD. As always, let's get some context. Pound CAD is definitely in a downtrend right now. The area that looks the best to sell it would be around the 1.7072 area. The reason for this, as you can see, is it's a previous structure high there. So the market's been swinging down, making lower lows and lower highs all the way along. So I would believe that if it gets up to this area here, we should see at least a little bit of resistance. We're not going to see it smash all the way up to that, to the massive highs over here, although that's possible. But we'll see some sort of a small reaction, at least down towards the 1.6616 area. So selling up at this area over here for the market to move down to that area there. Now we have about 6 minutes left, so let me quickly dive through. Someone wanted to, I won't go through the rest of the Forex pairs because we won't have time to go through them all, but there were a couple of requests, one being oil, I believe. So what do we think is going to go on in oil? Well, oil here we can see is this downtrend. We can see that there. That doesn't count. Well, it does count, but that's not going to help us in this immediate direction, okay? Because that was a long-term trend. Which way are we going now? I would say that the market is definitely moving to the upside. We can see that it's reacting to this area here. So it's going, bouncing off of this trend line all the way up. I would be looking for the market to react to this trend line here at 46.90, and I'd be looking for a buy when the market reaches this level there. How would you get in? Probably with some sort of a candlesticks, a reversal pattern, so maybe a bullish engulfing type pattern down at this area over here, or you could jump down to a lower time frame and look for a 1, 2, 3 reversal or something similar to that when it comes down to there. But from my perspective, this is almost certainly a buy at the moment when it gets down to that level there. What was the other one someone wanted to have a look at? I think it was gold. So which one? There we go. So where do we see this one going? This one is an untidy mess right now. In all honesty, I don't really know which way I'd rather trade this. There's no real trend to take advantage of here. I think in the short term, it moves a little bit higher, but I don't know what your outlook is. So from a longer term perspective, I wouldn't know which way this is going to trade. I think short term, it breaks out above these highs here and it moves up towards sort of this area around there. In the short term, I think it hits $1,300. I do. But in the longer term, do I think it can break out above here and move on to those highs? Genuinely, I don't know. I really don't know. So And the chart isn't telling me very much either. It's not really giving me any hints right here. Okay. Should we look at some? Are there any other pairs or instruments you'd like me to take a look at? We've got about 3 minutes left here. So before we wrap everything up, are there any questions that you have or any other pairs that you would like me to cover? Apologies for the earlier little discussion with Johnny, if that took any of you by surprise. Took me by surprise as well. Interrupted my flow a little bit, but hopefully, you know, we got back on and you were able to and you were able, I had 47. I guess you're talking about oil. Bless me. And you were able to get some value out of this. But yeah, everybody, you know, everybody's always entitled to their opinions. And that's what you need to remember about not just the Forex markets, trading in general. You know, even if you look at the investment bank reports, everybody's got their own, they've got their own take on things. They've got their own opinions. It doesn't make anybody right or wrong. It's just different. And it has to be different for the markets to move, because if they're not different, then the markets don't go anywhere and we don't make money, right? Now, earlier on, Johnny was saying that he had an opinion on, I forget which pair it was, on the direction of the pair, and he may well make money from that particular trade. I may make money too. You know, you have to think about what people's time horizons are. I think he was mentioning something like the weekly chart and things like that. So his may be a little bit more long-term than mine are. So he may be looking for something over the next few weeks, and I'm looking for something over the next few days. So we still might end up making money. But I think one of the biggest lessons of all of that is that there are, you know, 1,000,001 different ways to trade the markets. There are 1,000,001 different opinions out there. No one's ever right or wrong, because everybody's always right and always wrong at some point. You know, that's just trading. That's the way it is, and that's the way that we make money. Apologies for the chihuahuas in the background who are fighting. So just at the right amount of time, at the right time when we're looking to wrap this up. But if there are no other questions, I'd like to thank everybody for joining this morning. It's been an absolute pleasure. I hope you all got a lot of value out of it. I really genuinely do. And please make sure that you join us next week. You know, as we get into a bit of a flow of these things, hopefully this becomes like a really, really good resource for everybody watching. And, you know, you all use it to sort of really hone your skills in the FX markets. Okay, so thank you very much, FX Street, as well for hosting this today. As always, it's been an absolute pleasure. And I will look forward to speaking to everybody next week. Good luck to everybody. I hope you all do well. I hope everybody makes money, and I'll speak to you on next week's Talk Forex. Okay, so take care now and have a wonderful week in the markets. Goodbye.